Welcome to another episode of Econopolitics, the official podcast of the Economics and Politics section of LASA, the Latin American Studies Association. We have a great lineup today for you. I am joined by our section member and colleague, Leslie Armijo from Simon Fraser University in Canada. And we have two special guests from the Inter-American Development Bank, Andrew Powell, Principal Advisor, and Eduardo Cavallo, Principal Economist, both at the bank's research department. Andrew and Eduardo are the coordinators of this year's flagship publication, 2021 Latin American and Caribbean Macroeconomic Report entitled Opportunities for Stronger and Sustainable Post-Pandemic Growth, which I encourage all of you to review on the IDB site. Welcome, Andrew, Eduardo, and Leslie. Andrew, perhaps we can begin by asking you to briefly outline the bank's scope of activities, its organizational structure, so everyone has a better idea of the bank's size, mandate, and main sectors of activity.
Sure. Well, first of all, thanks very much for the invitation to be part of this conversation. It's a great pleasure to be with you. I've actually been to a couple of LASA conferences, so it's a pleasure to do this. So the Inter-American Development Bank was founded in 1959. The shareholders are 48 countries, so it's owned by country nations. And that's 26 borrowing countries in Latin America and the Caribbean, and 22 countries outside of Latin America, the non-borrowers outside of Latin America, including the US and Canada, and many European countries, and also Japan and China, and Korea being the two most recent members of the bank. I believe it's the largest MDB in terms of its disbursements in terms of dollar flows to the region. Disbursements were actually a record level of $18 billion last year. That's from the IDB group as a whole. The IDB group includes the IDB, which is what most people think about in terms of the sovereign lending, so it's the lending to governments, but there's also a very active group called IDB Invest, which lend to the private sector. And we also have a group called IDB Lab, which does more cutting edge type projects also to the private sector without what we call sovereign guarantees. We have offices in each of the borrowing countries, so 26 offices around Latin America and the Caribbean, with a team of a representative and a team of specialists in each of those offices. As you said, Eduardo and I are both in the research department. We have about 20 PhDs, I think, in the research department at the moment. And we produce, the flagships of the bank with our colleagues in other departments. Last year's flagship was on infrastructure, and this year we're publishing a flagship on trust. So it's on thematic themes. And then we publish a macroeconomic report each year, which is the one you mentioned in the introduction. So the IDB lends to countries, to governments, and to the private sector for development projects. Pretty much a wide range of topics, from infrastructure to health to education. But virtually, in every sector you can think of course, the priorities vary depending on the particular country and the priorities that have been identified. And of course, we work closely with the country authorities to determine what would be the most appropriate lending program, and also knowledge programs. So we like to think we're a knowledge bank as well. And knowledge forms an important part of our activities, producing the reports, but also and more academic papers, but also a lot of technical assistance in particular areas which underline, the more operational side of the bank, the lending side of the bank. Hope that's okay. Happy to answer any follow-up question you might have.
Joseph, we can't hear you.
Sorry. So Andrew, the bank will interact with civil society, for example, academia. how?
Yes. Yeah, no, great question. I mean, so we actually interact a lot with academics throughout the region. We've done that since for the whole history of the research department. Actually, we have various ways of doing that. But one interesting one is that a long time ago, actually 20 years ago, I would say, the research department came up with something that we call the Red de Centros, which is sort of research network projects, whereby, and we fund maybe 2 or 3 a year on average. And we basically come up with a topic with a reasonably, elaborated methodology, but also leaving many things open. And we publish that as a kind of call for proposals. And we have a very good list of all the universities and research institutions in Latin America and the Caribbean. And so then they propose and say they want to be part of this research network. And they say, well, you want us to do this? We actually think you should do that, and they make suggestions and improvements on the proposal. And it's a competitive process. So we get a number of proposals, and then we select normally between 6 and 8 from different countries. And we then pursue this research project together. And it really is a joint effort. It's a very nice, it's been an extremely fruitful product for us for many reasons. I mean, it helps us support research in the region, but also it's a sort of joint learning exercise on whatever topic it is that's been chosen. And then those papers that are written as a result of that often come out as a book. They certainly come out as IDB working papers, and in many instances, actually, we've had special issues of academic journals that have, those papers have formed the basis of those special issues. Eduardo is actually running one at the moment on fiscal rules, so he can speak to that. But it's been a very, that's one way in which we interact with academics. It's been a very successful program over the years.
Fantastic. Andrew, perhaps you can give us an idea of the overall macroeconomic impact of the pandemic across the region over the last year. Tell us the real, the bad news.
Yeah, and unfortunately, it has been a really serious, well, obviously a human crisis and also an economic crisis. And the estimated loss in GDP is about 7.4%, which we've done some historical work with some colleagues actually in academics in Argentina. And, we think that this is the largest loss probably in a single year for the last 200 years. I mean, you have to go back to sort of the wars of independence to find losses on this magnitude in a single year. The 1930s, maybe the loss was greater, but over a 3-year period. So it's really a major crisis that has been provoked. And it's a very unique one in the sense that, it was governments that went out and, purposefully closed economies to try to stop or at least slow down the spread of the virus. So in that sense, it's not really a normal crisis. It's certainly doesn't fit in with normal crises and the analysis of normal crises. Obviously, some countries were hit even worse than others. The tourism-dependent countries were hit very badly, given the, basically, the bans on international travel and so forth. So countries in the Caribbean, the Bahamas, Barbados, Belize, and Costa Rica, and Central America as well, all very, very badly hit by the impacts on tourism. And unfortunately, the countries are in different positions, but in general terms, the war against the virus is still not really been won. Latin America's had 23 million cases, cumulative cases, and 733,000 deaths now. And the virus is still there, so countries are trying to open, but it's a difficult proposition. And as you open, you run the fear that there will be new outbreaks. I think the region did worse than most regions in the world, unfortunately. Latin America and the Caribbean has about 8% of the global population, but Latin America and the Caribbean accounts for more than 25% of global debt. I guess there's many reasons that could be that people have written about. Informality being high there on the list. Also, the worst strict lockdowns in most countries in the region, but perhaps the enforcement of those lockdowns was not perfect. Also, the quality of the health infrastructure may be lacking in some places, and there was poor testing and contact tracing efforts going on. And there's also a lack of infrastructure to connectivity and digital infrastructure for people to be able to work at home. So I haven't read any very good account as trying to explain more precisely, but I think those are the factors that most people sort of have in mind. So it is has been a major recession. We're hopeful that growth is coming back and that countries will be able to open safely. I should say the IDB, we don't do growth projections per se at the IDB. We leave that to our able colleagues at the IMF and the OECD and the World Bank and other places. The IMF is suggesting that the region should grow at 4.1% this year. And there are certainly indications that countries are starting to grow, that the worst is over in that sense. But of course, these projections are fraught with uncertainty. And so there's definitely, downside risk if largely related to the health crisis, if the vaccine program rollout programs are delayed, or there are new strains which are more contagious and possibly some even resistant to vaccines, that of course would be a serious problem. There's also some upside risks. I mean, I think, China grew in 2020 and may grow at more than 8% this year. And that's very supportive of commodity prices, which are high. I mean, soya and copper in particular are now significantly higher than they were pre-COVID. So that benefits the metal producers and the agricultural producers in Latin America. Oil prices are also, they just suffered a little bit yesterday, but still relatively have come back quite strongly, and we have a number of oil producers. And the US is now, going to grow more strongly, I think, with additional stimulus and so forth. So that's particularly helpful for Mexico and Central America and the Caribbean, assuming that travel resumes and tourism and trade gets back on track. So, there's a lot of risks, but hopefully the region is recovering.
Right. Leslie, over to you.
Eduardo, would you like to talk to us, please, about financial flows, both public and private? And I also have a really practical question. The report itself, which just came out, covers data up till about when?
Sure. So first of all, Leslie, Joseph, thank you very much for the invitation. It's a pleasure to be part of this panel, and thank you for giving us the opportunity as well to present our work to your audience. So in terms of what has happened to financial flows in the region, in the report, we tried to analyze carefully particularly what happened during the peak of the pandemic crisis, which when you look at the data was, in terms of financial flows, was on the second quarter of 2020. So as the pandemic erupted in early January, and we started to developments began to unfold and so on. Really, the lockdowns and the huge impact on economic activity began to be felt around March or 2020. And actually, financial data is one of the first things that reacts to those kind of developments. And if you read the macro report from last year, which was published around that time, we were worried back then about what was happening to portfolio flows and the outflows of capital from the region at the beginning of the crisis. Other institutions were worried about that as well. You saw at the beginning a significant impact on the region, on a region that is very sensitive to those types of situations, because it has been the epicenter of what we called sudden stops in capital flows for many years. I mean, Guillermo Calvo used to be the chief economist at the research department of the IDB, and he's credited for having coined the term sudden stop. In a sense, it's a preoccupation. It's an issue that started with the crisis and issues pertaining to Latin America. So when this pandemic crisis erupted and we began to see the financial flow data, we were of course worried about that. Now, fortunately, in a sense, this was reversed, and most of the countries in the region were able to maintain access to capital flows, both from private sector and also from the public sector. So public capital flows, meaning lending from institutions like the IDB, but also the broader multilateral institutions, IMF, World Bank, and so on, picked up quite significantly, and that was very helpful, particularly for the smaller countries in the region. And capital flows from the private sector were also resuming, and countries that had a good macroeconomic fundamentals were able to tap the markets at the convenient range. So what you saw is that actually most of the countries were able to avoid a crisis as significant as a sudden stop. Even though there were some sudden stops that manifested themselves in the region, they were short-lived, and most of the countries were able to come out of that situation fairly quickly during the year. There are, of course, several factors that explain that, but I would like to highlight two. On the country side, it is very clear that countries that had stronger macroeconomic fundamentals, lower fiscal deficits, lower levels of current accounts, lower levels of dollarization, higher level of reserves, were able to withstand the crisis better and had the more stable capital flows. The other factor I would like to highlight is that the reaction, the policy reaction to this crisis at a global level was a significant increase in liquidity. Central banks were very active during this crisis, and that liquidity, of course, found also its way towards capital flows to the region. So that also certainly helped.
Let me push you just a little bit more. I was interested to read in the report the comparison between 2008 and 2019 on those four things that you just mentioned: fiscal deficits, lower dollarization, foreign exchange reserves, and I forgot, maybe
yes.
Debt or something. Because, you know, you start the report saying 2019 was already terrible. We can make the analogy to an airplane with a broken engine. Growth is terrible. And yet, if you look at that comparison, it looked like on 3 of the 4 things that research says is correlated with sudden stops, actually things were a little bit better. Did I read that right? And so is this learning? Is this fortuitous? I thought that was interesting.
No, you read it right, but let me clarify. So to begin with, The comparison with 2009, in our view, is relevant because despite the severity of the global financial crisis in 2008, 2009, countries in Latin America and the Caribbean were actually able to withstand that global shock fairly well. So you didn't have a repetition of, say, the end of the 1990s in Latin America in the aftermath of the global financial crisis. And when you look at why that was so, is because most of the countries in the region entered the global financial crisis with very low fiscal deficits. Back then, we actually had current account surpluses rather than deficits, meaning that we were generating more savings than what we were absorbing from abroad, and therefore we were net lenders to the rest of the world on average. We had very high level of international reserves, and we had gone through a process that had allowed many countries to reduce the level of dollarization. So the fact that countries were able to enter into that crisis with very strong macroeconomic fundamentals proved to be a reason why they were able to withstand that significant shock so well. So now we were curious about the same thing. So how did countries enter this crisis compared to how they had entered into the global financial crisis? And here is where the nuances start, because the headline figure that you quoted is, of course, an average, and an average of a very heterogeneous region. And heterogeneity within the region, I think, has even increased compared to where we were in 2009. So some countries have improved macroeconomic fundamentals compared to then. Many countries are doing worse than they were back then. And the interesting thing, I think, is that what we find this time around is that precisely the countries that had or were more successful in terms of withstanding on the financial flow side this crisis better, for those countries that had stronger fundamentals. So you read that right. I just wanted to make the clarification of how we did that exercise and why we did it, and stress a little bit the conclusions.
Now, our listeners are going to be saying, which countries?
So, there are, as Andy was saying in his presentation, this shock has also been rather asymmetric in terms of who was hit and why. It's not just all fundamental. So we have, for example, these tourism-dependent countries where the shock itself was very significant because their main economic activity, their main export, was basically affected directly. So, in those countries, it's a little bit difficult to make the mapping between fundamentals and the shock, because just the shock was very significant. Then we had a group of countries, the commodity exporters countries in the region. We have countries that are heavy exporters of minerals, other countries that are exporters of oil, other countries that are exporters of agricultural products. At the beginning of this pandemic, commodity prices were significantly affected, and that had a correlate as well on flows for many of those countries. And then, for example, some non very usual suspects, countries like Chile, for example, which is a country with very good macroeconomic fundamentals in general, was affected by this crisis, and that could have been a reason. And then you had countries that entered this crisis already in a weak macroeconomic conditions. Some countries in the region had to undergo debt restructurings. even sometimes before the pandemic. And you know, those countries, of course, the situation was worsened or was made more difficult as a result of this crisis. So it's very, very hard to make a sort of an assessment that will encompass all. I will finish by highlighting some. For example, you had countries like Brazil and Peru, where you had for a period during this pandemic a significant decline in capital inflows. Now, those countries didn't suffer a sudden stop because at the same time you had a significant amount of repatriation of foreign assets from Brazilian residence investors and from Peruvian residence investors that was able to offset that. And in a sense, that's a sign of strength of the economy, that during a crisis like this one, you had this kind of repatriations that were able to make net capital flows more stable.
Do you want to say anything about what is just hinted at in your report, but sort of different projects for making foreign debt sustainable? I mean, for example, you talk about, let's see, I learned some new language. You know, there's reprogramming debt, which I think means pushing it out, which is different than restructuring, which means you take advantage of paying off your old loans, I think, and borrowing at the current low interest rates, which is different than taking a haircut. And I've forgotten what the formal term for that would be. I was reading Ann Kruger on, I think, Project Syndicate a couple of weeks ago, said, well, debt forgiveness is all that the IFIs are talking about, but really that's not what's needed right now. We need, developing countries need assistance in kind. They don't need debt. They need new money without strings and so on. Do you want to comment on any of those debates?
I can comment on that if you like. Yeah, I think you were referring to reprofiling actually. So so yeah, I mean there are sort of like three things that countries could think about doing now. If one is sort of sometimes referred to as just debt management or liquidity management operations. So that's essentially trying to refinance and take advantage of low interest rates or particular conditions that sometimes arise. No? And actually, the management of debt has become much more professional and much more sophisticated in Latin America and the Caribbean in the last 10 years or so. So most countries have a specific debt management unit, and they've become really pretty good at these kind of things now. And actually, the IDB, we have a kind of a network of all the debt management units, and we get together twice a year to talk about prospects and so forth. So anyway, liquidity management or debt management is the first. Then sort of second on the list is reprofiling, which, as you pointed out, is sort of just essentially pushing out maturities. I think the IMF invented the term, I suspect. So that's sort of like pushing out maturities without any what's called haircut, without any capital haircut, so without any actual debt reduction, nominal debt reduction. The evidence on reprofiling is somewhat mixed. So, some countries have had some success with this. Actually, notably in Latin America, Uruguay was one of the earliest reprofilers back in 2002, and that was successful. But other countries, it hasn't necessarily resolved the underlying problem. So we have a number of countries like Belize and Jamaica that have reprofiled and reprofiled and reprofiled. So, for whatever reason, that hasn't been enough. Let's put it that way. Or the country did not combine that with other policies. Jamaica actually now is doing much better, by the way. So that's a success story, actually. Eventually, a longer term success story. And then after reprofiling comes restructuring, which does involve then a principal haircut. And recently, actually, Argentina and Ecuador both restructured with principal haircuts their debt. Now, restructuring has proven to be quite difficult in the past to get creditors, to agree, and has provoked, court cases in New York and legal actions and so forth. And there's a big discussion about that. It may have become slightly easier because now you have in what are called collective action clauses, and there's actually a whole new generation of collective action clauses. So these are contracts these are clauses in bond contracts that allow for the renegotiation of bond contracts, which are a little bit more, I would say, one way of putting it is it's a bit more debtor friendly. I mean, it's easier for the borrower to pursue one of these restructurings if it's absolutely necessary to.
Not just allow for, it's if so many people agree, you got to agree, right?
Yeah, exactly. So there's a discussion as to whether, the big discussion here is whether there's an efficiency gain or not. So, you can say, oh, well, this is better for the creditor, so it's worse for the debtor, or it's better for the debtor, and then it's worse for the creditor, right? So it's like a zero-sum game. But other people say, no, it's not entirely a zero-sum game. There are efficiency gains here as well, because there are these holdout investors, and their aim, I mean, the vultures, as they're called in common vernacular, their aim is precisely to disrupt a restructuring. That is their aim, because if they can stop the restructuring from happening, then they can restructure on very favorable terms, and indeed that has happened many times. So some people argue that there's actually an efficiency gain for these kind of clauses as well. It's not just a zero-sum game. So yes, I mean, we are hopeful. Countries are trying to walk this path between supporting their economies and, supporting families and firms during the crisis, but at the same time trying to maintain, fiscal sustainability. And I think, the majority of countries are indeed walking along that path. But there are some cases where the crisis has been particularly bad. And where there were pre-existing conditions, to be fair, in the case of Ecuador and Argentina, there were pre-existing conditions, shall we say. These are the sort of last resorts that countries may have to go to if things get worse. We're hopeful that won't happen, but as I say, it's an uncertain world, so we'll see.
I have more questions, but actually I'd rather save my time and use it for the later topic. So over to you.
All right. Leslie, did you have a question on multilateral institutions?
Oh, right.
You want to do that later?
So that's the next one. All right. So this is partly just a personal question of mine, but maybe one or both of you could weigh in. I mean, with respect to this crisis, and also more generally, how do you see the de jure and especially de facto division of labor among multilateral institutions, both the development banks, that is, the World Bank and the IMF and the IDB and the CAF, and maybe even the big national development banks. I mean, we can't ignore the BNDES in Brazil, I think, when you're talking about big development banks, but also these institutions that are not giving out money, but that are also shaping the debate, that are also acting as knowledge banks and as, what shall we say, cheerleaders for various ideas. I'm thinking of CEPAL in particular, but some others. Even I've been doing some looking into the work of the CLAF, the Shadow Financial Regulatory Committee, which has promoted collective action clauses instead of the option of the sovereign debt restructuring mechanism, which was being pushed by the IMF for a while, or some people at the IMF. So, all right, the question is, how is this sorted out? Who does what?
Well, let me have a first go at that. Eduardo can jump in if he wishes. I mean, I think it's, each institution has its own set of objectives and its aims, and we collaborate a lot. So there is a lot of collaboration going on, perhaps behind the scenes, so to speak. I mean, the clearest one, I guess, is between, the IMF and the multilateral development banks. The demarcation is reasonably clear, right? The IMF's job is more of its history is, shorter term balance of payments crisis. No, that was its raison d'etre. It's moved a bit beyond that to financial crisis or more generally speaking, but it's more of a crisis resolution and assistance institution. Of course, it's involved in all the discussions as well about longer term development issues, but and we collaborate. And so the multilateral development banks are more, on longer term development issues. But of course, there's a gray area between the two where we collaborate very closely. And whenever a country signs an important IMF agreement, and there's an IMF program behind that, you will see in Latin America, you will see the IDB and the World Bank being part of that, because we will agree essentially, the overall parameters of that. I mean, the IMF generally takes the lead, but we will agree the overall parameters, and then, the IDB will provide financing and knowledge in some areas, and the World Bank will provide knowledge and financing in some other areas. Or maybe we even work together on some areas, and in fact, we've worked very closely with them. So there is a lot of collaboration behind the scenes, and we also collaborate a lot, with CIPAL and actually the OECD has become more important now. There are more countries in Latin America and the Caribbean have joined the OECD, or they're in the process of so doing. And that, I think, has been a very positive development. So again, we work and talk with our friends, and actually we have done several things together with the OECD. And your point about the national development banks is a good one, because we also work with them. Actually, we have frequently lent money to the national development banks, and I think that collaboration could be even more fruitful. We like to think that our lending comes with knowledge, and so we can show things that have worked in other countries and suggest them in other places, and try to work on a bit on the governance issues and so forth. So we think that we can maybe hopefully have a positive influence there as well. So I mean, there's a lot of collaboration that goes on. That's the main message I would come up with. There isn't. I can't really think of areas where there's been sort of a conflict, if you see what I mean. That's been extremely rare.
Let's see.
I think you had a question about whether, regional institutions have done enough, and if not, why not? That was your question that you sent us, which, I suppose one answer to that is we're never satisfied, so we would always like to do more. And I mean, the model of multilateral development banking is a particular one where we have a certain amount of capital that has been given to us by our member countries. And then we issue bonds on global bond markets. We're one of the largest issuers of bonds, and the World Bank is one of the world's largest issuers of bonds in the world. And the World Bank, the IBRD, and the major regional development banks all have a AAA rating. So that allows us to borrow more and to borrow on very good terms, which we can then pass on to our member countries in terms of low interest rates and long-term loans at very low interest rates. But of course, that means that we're constrained. There's a maximum amount of lending that we can do. Otherwise, the bond markets will tell us that, we can't borrow that much, or we can only borrow at higher rates, and we would lose our high rating. So there is a constraint which comes basically from the underlying level of capital. as I mentioned earlier, we dispersed $18 billion in 2020, but I don't think that's a sustainable amount. And we cannot disperse $18 billion every year with the current level of capital. So you may know that our aim is to try to get another capital increase at the moment to try to relax and constrain. I mean, we do think that we have more demand than there is supply at the moment in that sense. And then, as I think you also pointed out, you know, I think these areas of in the recovery to the crisis, I mean, the policy actions that countries are going to take is really critical, and the report has, you know, purposefully a set of pretty strong recommendations in some places, particularly on the fiscal policy side. So it is going to be really important, the kinds of policies that countries now undertake to in the recovery phase. So we do hope, you know, that we also have a positive influence in terms of the policy discussion.
Well, speaking of that, then you mentioned this idea that social scientists float around every once in a while, which is sort of the upside of crises. In other words, the idea that reforms that one has wanted to see for a long time and aren't happening, maybe have an opening during a crisis. And I will point out that one could make some arguments like that about US politics. I wondered if either of you want to comment on that. Do you see, I guess the question is, do you see this crisis focusing minds on some long-standing issues? You mentioned in the report the idea that, say, infrastructure spending is chronically too low. Public sector salaries are, I think the statistic you mentioned was about 25% higher than they would be for the same job in the private sector, things like that.
Maybe Eduardo wants to take that one.
Yeah, so to begin with, let me back up what you just said, saying that there's actually quite robust empirical evidence showing that during crisis, there are also opportunities for reform that can lead to higher growth. There's published work showing exactly that result. And of course, the reason being, or the theory being, that during crisis, it's a period in time when the status quo, which may be preventing the possibility of doing reforms, sort of gets broken, and therefore that opportunity emerges. We think that opportunity is around here now. That's why we have titled also the report starting with the word opportunities. We think that the opportunities are there, and we cover a variety of areas where we think that those opportunities are prevalent and are really important. And let me highlight three. So there's a whole discussion, for example, about global value chains, real value chains, and so on. This is a crisis where one statistic that we put up in the report is that if you look at the US only, the US has shifted or changed sources for their imports as a result of this crisis in about $56 billion. So it's not that they reduced their imports in that amount, they changed the sourcing in that amount. Well, Latin America and the Caribbean is very close to the US, and exports only about $25 billion every year to the US in intermediate goods. So, you know, in a period of time where you are trying to seek opportunities in terms of how are you going to come out of this crisis, or how are you going to increase production and exports to be able to come out of this crisis, this change is something that the region can tap. And of course, that will require strengthening regional integration, will require working on supporting exporters, providing them with logistics, with information, with the tools that they need to be successful in that endeavor. That leads me to the second opportunity, infrastructure. Infrastructure is really important, not only because it would be one of the elements that would, for example, support exporters in the region, but also more broadly because infrastructure is really important as a key intermediate input for the production of everything in the economies. It's a critical economic sector. Latin America and the Caribbean has huge infrastructure gaps. Andy and I and other colleagues have worked on that. Last year's flagship report was on infrastructure, and all of the information is there. There is an opportunity this time around. How can you do to increase investment in infrastructure in a context like this one? Well, on the one hand, you have fiscal policy. You have what we economists like to call expenditure switching policies. You can try, without changing the overall level of spending, to try to shift around spending and do less of what we would call government consumption and more of what it's investment, which has a higher multiplier on the rest of the economy. There is scope, there is space to do that, as we discuss in the report. Then there's the opportunity to bring in new actors into the financing sphere. For example, institutional investors, pension funds, mutual funds, and so on, invest a very small fraction of their portfolios in infrastructure projects in Latin America. There are several reasons why that is so, but one key reason is because we still have not developed the right products, financial products, so that they can really include infrastructure in their portfolios. We have a discussion about that in the report as well, together with other ways in which we think that the private financing of infrastructure could increase in the region. And then the third issue I want to highlight is what we call sustainable infrastructure. Latin America and the Caribbean not only has the economic challenges, Latin America and the Caribbean has made commitments in terms of reduction in the emission of carbon in the context, for example, of the Paris agreements on climate change. Well, for a long time, the discussion was, well, there is sort of this trade-off between the environmental goals and the economic goals. Well, in the report, we have a very nice discussion actually showing that that's a false trade-off. I mean, investing in what we call sustainable infrastructure or green infrastructure is something that can be good for growth and good for the environment. So it's no trade-off. It's actually going to be good for both. And how can that be possible? Well, it can be possible because sustainable infrastructure or green infrastructure, if it's well designed, well planned, and well implemented, can have the same or even better outcomes than gray infrastructure in terms of the services that it enable to provide. And at the same time, by being sustainable means that it contributes to reducing the emission of carbon, which is the critical element to go towards a net zero carbon economy. So the report highlights these three opportunities. Well, the report is broader, as you know, but for example, we have 3 chapters on each of these issues that I have just discussed, and we think that they should be part of the policy discussion and the policy action, quite frankly, in the region for the years to come.
We're quickly running out of time.
Yeah.
I just wanted to very quickly touch on the issue of corporate resiliency with Andrew and Eduardo, if he has anything to say, and then back to Leslie for the last question. So businesses in the region have suffered traditionally from low level of productivity. Now comes the pandemic, and I just wonder how the bank views the general health of large, mid-size and small companies. And to that point, how does the bank talk to the private sector? How relevant is what the bank does in the planning and reflection done by corporate leaders at all levels, all different types of economic activity?
Well, yeah, thanks. Thank you for the question. I may have to leave after I've answered this one, so I'm sorry, I have another meeting. So it's a very good question. I mean, you know, we've done quite a lot of work on productivity and looking at firms and the dynamics of firms in the region. And it's very revealing, no? I mean, I think Latin America and the Caribbean has a long tail of small firms, which tend to be unproductive when you look at their productivity levels. Now, you know, I think actually in this crisis, this might be, you know, kind of a, if anything, you know, maybe a silver lining is there in some sense, but I'm not sure, which is the following, no? That a lot of the small firms have very little capital, they're labor intensive, and they've been hit by this crisis. There's no doubt, but they may actually end up being more resilient than you know we think. That they may end up being the ones that also bounce back more quickly because they're flexible and so forth. Actually, Eduardo has written about this. But you know, but they're also the low productive ones. So we don't really want them just to bounce back as they are. We want them to bounce back, but bounce back in a more productive way. So if we can try to find ways in which they bounce back, but become a bit more productive in the process, that would be a major contribution. On the other hand, if you look at the larger firms, and there's a chapter in the report which focuses more on larger firms. It's very interesting because they've actually also managed to tap capital markets in a significant way, like their governments, and they have gone out and borrowed, and so issuance was actually really very strong through 2020, and so those firms, you know, went out to borrow, to allow them to become more resilient, I think, and so they've been quite liquid. They have investment has fallen clearly. So, you know, they haven't been investing the additional funds raised. So they've been keeping this as liquidity to face the pandemic. So there, I think, you know, hopefully you know, governments are monitoring the larger firms closely because, of course, they account for a large proportion of employment and so forth. And you know, we think that they are reasonably resilient. Now, you know, there are then these uncertainties which basically depend on how long the health crisis lasts and also what reallocation effects that we see. And underlying your question, I think, is a sort of more structural one. I mean, it's clear that we need to improve firm dynamism and firm innovation and so forth. And those things have been very lacking in the region. I mean, we have this tale of small firms, but very few small firms become large firms and become very successful large firms. So understanding the constraints, why that is and why that hasn't happened, I think there's still a lot more work to be done. There's another chapter in the report which focuses on trade because, of course, you know, a lot of the firms, as they become more successful, are also involved in either exports, imports, or both. And it's interesting because the large firms, you know, trade obviously fell, and large firms have kept trading, but their trading has fallen, whereas small firms tend to go in and out. You know, they tend to be the exporters or not exporters. Whereas, so we think there might be costs associated with that, and because once you're out and you lose, you know, contacts with your suppliers, either foreign suppliers or foreign customers, then that might have additional costs. So I think trying to figure out how maybe medium-sized firms can be more consistent in trading could also be an important aspect for further work. Sorry, I really have to go now, but yeah, Leslie, you had a quick follow-up?
Oh, no, I wondered if one of you could say something more about, you talked about this platform, connect something for basically for helping small and medium-sized firms figure out how to export. That sounded like a very interesting opportunity and one perfect for the bank to set up as one of your networks.
Yeah, that's been very successful. Connect Americas, I think it's called. It's run by our colleagues in our integration department. We have another department called the integration department that has done a lot of interesting work on these kind of things, and also on trade agreements and many other things. So that's a very interesting product that they, and I understand it's been very successful. Let me,
Andrew, off you go.
Let me say goodbye and thank you once again for kind invitation. And
thank you, Andrew. We'll be in touch.
Thank you.
Leslie, I think you had perhaps one last question.
Yeah, I would love to hear more about regional integration. I was intrigued to hear, to read in the chapter about global value chains and trade, a pretty strong statement saying, gee, global value chains are lovely, but they're dangerous, because when there are crises, and there are always crises, crucial inputs don't appear, markets dry up, etc. And so therefore, new argument, we need more regional integration. I mean, I happen to think that has all kinds of interesting political aspects, but it was like a new argument saying, given the way the world is working, regional value chains might be worth looking at. Now, before you answer, let me bring up what I understand to be the sort of longstanding objection, which is Latin American countries say, but we all trade the same thing, so how can we integrate and trade regionally? And besides, we don't have good infrastructure for transport.
Yeah.
Eduardo?
No, great point. Thank you very much for that question. Actually, Latin America and the Caribbean has done a significant amount of effort in terms of regional integration. And if you look at the map of regional integration in Latin America, you will see that you have several, a lot of sub-regional trade agreements. So you have things like Mercosur, you have sort of the Andean Pact, you have a lot of these smaller sub-regional trade agreements that have been big efforts that the region has made to try to integrate with their neighbors and become a more integrated in that sense, in the sense to be able to facilitate trade. Now, one problem that we have faced is that, and this is explained in the chapter and in other and more in depth in other reports that the IDB has put on this issue, is that many times these sub-regional trade agreements do not speak to each other. So some of the harmonization that would be required in terms of the rules and the policies that would facilitate, say, Mercosur dealing with the Andean countries and so on, are just not there. I think we have an expression we have coined at the IDB, something like the spaghetti bowl of a regional trade agreement, because there are a lot of things going on there and that have been mixed. So the argument is that we need to work on those efforts that the region has already made to be able to strengthen and pile them up in order to become a stronger actor in the global arena. And the challenge for the region is integrating into global value chains, which has the risks that you have mentioned, but in a stronger way, being able to be more fully a part of those value chains, and not just sort of a marginal contributor to that. And I understand that there is this feeling that sometimes this is not feasible because we are all the same and we all export the same things, but that's just not the case when you look at the more granular data as the one we have analyzed for this report and which is presented in this chapter. Latin America has a great diversity in terms of the profile of exports of what's called the intermediate goods to other countries. We have some countries that have developed a lot of expertise in certain industries that are key suppliers to, say, industries in Europe and the US. It's not just all this idea that we're primary producers of primary products and we only export unmanufactured goods. Latin America and the Caribbean has developed an industry that is capable of supplying the world. What we need is to improve the logistics, to improve the agreements, to improve the regulation, to help really those countries realize the potential that is out there. And that's what we wanted to highlight in the chapter of the report, because that's really an untapped opportunity for Latin America.
How have these underlying preconditions evolved in the last, say, 20 years since the turn of the century? I mean, for example, you said, yes, there are these different trade agreements, but there are also studies saying, gee, they have more political aims. There's not that much intra-group trade. Ottaviano Canuto said, I think in this forum, well, you know, the Pacific Alliance is more a branding exercise vis-a-vis Asia than it is a trade agreement. So I mean, I'm just pushing. I agree with you, but I'm pushing you.
No, it's perfectly fine. You know, I mean, certainly the development has not been sort of linear and steady. There has been back and forth. There has been back and forth within the agreements themselves. A case in point, for example, Mercosur started as a very ambitious project that was supposed to be a custom union between the four founding member countries, Argentina, Brazil, Uruguay, and Paraguay. And you know, over the years, given the situation and the different realities that the countries were facing, the political issues and so on, it has sort of degraded in terms of its goal from a custom union to being more of a free trade agreement between these countries, that it's not even that free, because it has a lot of special regimes in between and so on. So, you know, clearly there were periods in time over the last 20 years when there was a higher impetus in the region and more appetite towards regional effort. There was a time even when we were speaking about the free trade areas of the Americas, as a collective global, as a collective regional effort. And, you know, there were periods of time in which, you know, countries started to look a little bit more inwards, and these efforts have waned. So clearly, you know, it must be acknowledged that the trend towards regional integration has not been smooth. It has not been steady. And it's not like we started here and now we are here and we can measure the progress. It's been back and forth. What the region has to realize is that there's an opportunity over there, because for example, the example I gave about supplying to the US. The US is supplying is changing suppliers right now because of this crisis. Well, we are here, we are close, we have the capacity to export those goods that the US needs, and we just need to become more efficient in doing so. We need the government support in terms of the logistics, the information, the accessibility to markets. We need the policies that really support small and medium exporters that maybe do not have the reach or the clientele or even the supply network to be able to tap those opportunities. That's a public policy issue. That's a concern that governments should have, and the focus should be how can we support our exporters to become stronger and better integrated to the global value chains, to be able to realize the opportunities, being cognitive, of course, of the risks. It's not, the more integrated you are, the more open you are. There's going to be things that are happening and crises that come and prices that go up and go down, but there are also tools to mitigate those risks, and we need to work on that so that we strengthen the opportunities and mitigate the risks. That's the challenge for Latin America.
This is a great example of how time flies when you're having an engaging conversation with stimulating guests. Thank you, Eduardo. We've reached our time, but before letting you go, as you may know, our tradition here at Econopolitics is to ask every guest for a recommendation in the region where some of our listeners, either doing research or on vacation, hopefully, might be able to benefit from your recommendation. So we've lost Andrew, but hopefully, Eduardo, you would have one or two recommendations to make in the region.
Well, absolutely. I will have to reveal my heart here. I grew up in Argentina. I'm from Argentina. And, most of the people foreigners that know Argentina, when they go to Argentina, they usually stay in Buenos Aires, and they are marveled by the beauty of Buenos Aires, the most European. We like to say Argentinians are very proud of this, the most European of the cities in Latin America. And all that is true. Buenos Aires is beautiful, but Argentina is a very broad and big country. I myself grew up in the middle of the country in a province called Córdoba, which is a beautiful province for those who have not had the opportunity to visit. This the most Mediterranean country. In Mediterranean meaning in the middle of the country. We have no sea. No, we are not. We don't have anything like the Mediterranean Sea there, but it's in the middle of the country. It has beautiful landscape, beautiful mountains, a very productive area, a lot of culture. That's where the base of at the Jesuit movement settled in the region, and there's a lot of heritage regarding that. So for people who like culture, who like beauty, who like good food, who like good humor, Cordoba is really the place to visit in Argentina. I would strongly recommend all your listeners to, next time they plan a trip to Argentina, make the effort to leave Buenos Aires for a little bit and travel that beautiful country. If you want to start in Cordoba, that's great. And of course, then the rest of the country, the north, the south. Argentina is a country that really, in terms of tourism, has some of the most wonderful beauties that a country could hope for. So that's my recommendation.
Fantastic, Eduardo. We would like to thank Eduardo and Andrew for joining us today at Econopolitics. We look forward to visiting you when next in Washington, D.C., and having you on another LASA event in the future. Thank you also to Leslie for co-hosting the program. You're a natural. Thank you very much. And for everyone else, please don't forget to follow us on Twitter, on the section site, and to subscribe, like, or send feedback. We look forward to seeing you all again soon. Until then, stay well, stay safe.